Good morning, everyone. Today it's our Tax Savings Tuesday. This week is the first week that everybody's getting their refund, so that's the reason why we are busy. If those of you who hasn't filed your tax return, please do make it already because tax we're already going to March. So now I'm Christopher. Of course, I'm IRAs acceptance agent, CEO, and chief marketing officer of our company, YCO Tax. We provide virtual tax planning while planning accounting service solution here in the US. We're going to give you some tips of the different tax sheltered products. And for us to start, I would have to share my screen. There you go. All right, so now with this presentation, we're going to talk about how to maximize your retirement, maximizing wealth through 401k. Through 401k plans, the Roth IRA, yeah, we have a lot of these questions today with our clients. And then we also discuss a little bit what are the pros and cons of the different products because we want you to really have an informed decision before going through because every product have their tax benefits. So we're going to explore the tactics for maximizing your 401k, the Roth individual retirement account, and then what are the unique features and benefits of Index Universal Life. This webinar is only less than 30 minutes. There's a Q&A session if participants are encouraged to type their questions. And you can download our free 10 steps business improvement checklist now on our website. And then you can be part of the gift raffle by subscribing to our YouTube channel. Just go to Chris Waikoko. All right, so I'm just checking this number. Yeah, this is what happened when you're working and doing the workshop at the same time. Anyways, just a disclaimer, this material has been prepared for informational purposes only. It is not intended to provide and should not be relied for any tax investment, legal, or accounting advice. Examples and other materials in this webinar are only for illustrative purpose and should not be relied for technical answer. Remember that YCO Tax, we are a virtual outsource accounting and wealth planning company, and YCO Tax is not associated with any institutions, and this presentation and its private business providing resources for small businesses. There will be a replay on this presentation on our YouTube channel, Chris Waikoko. Now, we're going to talk about who are the people that we recommend that they need to attend through with this presentation. We are targeting small business owners, self-employed, people that are receiving 1099s, have S corporations, LLCs or partnerships, e-commerce, non-accountants, with or without employees, high-income professional making $100,000 in annually because 2022 the IRS started to do audits. There are 87,000 new agents to audit small business owners, so that's why you have to avoid the trial and error approach on your financials. So for example, we have this case, Gloria. She owns a business, but she has her own clinic, but now she's considering how her business plan for her retirement, what are the things she needs to keep in mind to diversify. But the question is she maximizing her retirement account to minimize her taxes? The first thing is you need to understand that there are three buckets of how your income is being taxed. You need to know where your investment goes, whether is it taxable now, tax deferred, tax free. And then on the right bucket, you need to know what percentage of the assets is allocated to each category. Do you put it in your stocks, mutual funds, bonds, tax deferred like a traditional IRA, self-directed IRA, 401k, or annuities. And then on the other side, there's also what you call the tax-free. We have the Roth IRA, money bands, and cash value life insurance. So we're going to dig deeper more on the tax deferred, which is the 401k, and then the tax-free, the Roth IRA, and life insurance. For the 401k, remember this is a tax deferred. You don't pay taxes while you're contributing. You pay when you withdraw. So there are three benefits for the 401k. We talk about flexibility. When you say flexibility, they offer a wide range of investment options to suit various risk tolerance and financial goals. A lot of companies, especially in the healthcare, they do match 401k. We do suggest if you don't have business, you don't have so much deductions, try to contribute as much as the 401k because let's say you made 100,000 and then you put a $23,000 there instead of 100,000 on your taxable income that will be offset by your 401k. So your taxable income minus 23,000 will only be somewhere 77,000 because your 23,000 was allotted to your retirement. And I'm not saying that you have to put all your 23,000. What I'm saying that is the maximum contribution. I have to check on 2020 year 2025 what is the maximum contribution. I think it's somewhere to 24,000 now. The tax benefits every time you contribute to a traditional 401k are tax deferred, reducing, like what I've said a while ago, you're reducing your taxable income now and also employer match. This is also another way of employee retention. Your company can offer and match your 401k. The more that they match, the better for you, but also they will retain you. So this is a give and take relationship. The only variable or the cons for this kind of product, the withdrawal penalties. Remember, you cannot withdraw this. I mean, you can withdraw, but there are penalties before 59 and a half years old. Usually, they penalize you at 10% on the growth of the money on top of the tax on that particular year that you withdraw the money. And then there's also a market investment risk. There are some clients that they said, oh, we lose our money on the 401k. So it is also possible on this kind of investment because it is subject to market fluctuations, which can impact the value of your retirement savings. On the other hand, we talk about the Roth IRA, the individual retirement account. The benefits of the Roth, of course, flexibility. You can withdraw your contributions, but not earnings at any time, tax and penalty free. This gives you a bit more flexibility compared to other retirement account like 401k. And then there is no RMD. What is an RMD? RMD is required minimum distributions. So in certain year, let's say when you reach 73 years old and up, uh, the any pension, most of the pensions they will require you to withdraw minimum distribution unless if you did not let's say you don't want to withdraw 100,000 and you have a lot of money there on your other pension, but at the age of 23 73 the IRS will require that 100,000 or 1 million of your money need to have a minimum distribution at the age of 73. Otherwise, they will penalize, IRS will penalize your account or you at, I think, 25% excise tax. So you have to talk to your, if you're turning 73 this year, you have to talk to your administrator for your pension to tell them if you required a minimum distribution. Okay. Otherwise, that's the Roth IRA has the biggest benefit that your investments grow tax free when you withdraw funds in retirement. You won't owe taxes on your earnings as long as you meet certain conditions. And again, a while ago we mentioned that there's a tax free growth when you withdraw your funds in retirement. You won't owe taxes on your earnings. So the income limits, Roth IRA has an income limits. There are income limits for contributing to Roth IRA, meaning high earners may not be eligible to contribute directly. If you're making single $150,000 and up, just make sure that will limit you from contributing to your Roth IRA. The contribution limits are as follow. The annual contribution limits for people less than 50 years old is 6,500 for the year 2025, and then 7,500 for people that are 50 years old and above, which may be too low for those looking to save more aggressively. So you have to consider other platform that where you can put more money and less taxes. No immediate tax breaks because with traditional IRAs allow you to deduct your contributions from your taxable income now. Roth IRAs don't offer that benefit. You pay taxes upfront, which could be a disadvantage if you're currently in a high tax bracket. If you're 22%, 27%, just expect that you don't experience the tax breaks on this account year to year until you retire. Okay, the other tax-free product that you may consider is what you call the Index Universal Life Insurance. Primarily, this is a life insurance, but it also gives the following benefits. Like one is a lifetime coverage where, let's say, someone had a 1 million coverage while she's working, and then she passed away. Her family, spouse, the kids will receive 1 million tax-free. Okay. Tax advantage growth. Aside from the death benefit, there's also a cash value growth. The cash value component of the IUL grows tax deferred, and then you can loan from your policy. Let's say in a 1 million, maybe after 10, 15 years, there is already growth on the premium that you're paying, let's say somewhere 200 $30,000, you could actually loan that money tax free. Okay, that you can use. So basically, this is more like the concept of infinite banking. This is just one of the components because this you park your money in a life insurance. It's under the Internal Revenue Code that any money that grows to a life insurance, it's safe from taxation. Number three, market linked growth, similar to your 401k. I mean, you could actually diversify S&P 500. All of these things could be used for your for life insurance S&P 500. There are other portfolio where you could use the cash value to diversify. And then flexible premiums, while there are contributions, the flexible premiums you just have to talk for the IUL that you could adjust or add more money on in able to grow the cash value of your account. The complexity, these are some of the drawbacks of the Index Universal Life. The IUL policies are complex financial instruments with various fees, caps, and participation rates that can be difficult to understand. The performance risk, while the cash value can grow with the market, it's also subject to caps. Which means, I mean, the good thing is it doesn't let you lose so much of your money, but it doesn't let you grow also your money. So it has a certain, more like a conservative risk. And then number three, check on the surrender charges. Withdrawing money from the cash value or canceling the policy early can result in significant surrender charges and penalties. So the takeaways, number one, each option has unique benefits and drawbacks, and the best choice depends on your individual financial goals and risk tolerance and overall strategy. Present to your financial planner your current investments, insurance, debts, income, mortgage, expenses. This will provide a financial blueprint and create a financial roadmap. Then number three, your business is a great leverage on increasing your cash flow and investments, but not your taxes. And then number four, you always have to tell to your financial planner what is your plan 5 to 7 years down the road, like going to school, buying a new house. So they will align your budget and your retirement plan to your overall plan. So that's why here in Wyco Tax, what are the benefits of outsourcing? We provide this type of 15-minute free consultation because we want you to have a peace of mind and we want you to save headaches, save time, save money, and you can have faster access to grants and loans when your financial statements are up and ready with the trusted experts like Wyco Tax. Here in Wyco Tax, we are worry-free, year-round, competitive, and on time for accounting and tax planning service solution in the US. Again, so scope of our service, we go to your 6 slices of pizza, tax savings pizza chart from the entity. We check your record keeping from your personal, how we could do it, business expenses. Then, if you're qualified to some business tax credits, tax sheltered plan, and also tax compliance or tax filing. We do that. So that's why we have this ongoing offer 2024. If you will bundle your tax and bookkeeping, we are giving $523 off. That will you will have a IRS accountant dedicated to your books and your tax preparation. And we also meet for a tax planning 30-minute every quarter. All right, so you can connect with us. You can find me on LinkedIn at Chris Y Coco. You can also find on YouTube, Facebook, Instagram. Just look for Yco Tax on the following platform. All right, so stay tuned on March 11. We would also have the 9 a.m. Central Time, another presentation called the Top 10 Tax and Bookkeeping Tips. So that is our, let me stop sharing. Again, if you have further questions, we do have a replay on this presentation on our YouTube channel. Let me see. Okay, so far we don't have any further questions. Again, tax season, make sure to check all your tax forms are ready and make sure to book us a 15-minute pre-consultation on our website, which is posted on the description on this presentation. Again, stay tuned and then happy tax season. The refund is coming out. I'm Christopher Waikoko, IRS Acceptance Agent, CEO, and Chief Marketing Officer of Waiko Tax. Have a safe day. Bye for now.